Perhaps the most convenient ticker of the AI meme sensation has been AI. C3.AI has had a huge move on the year, benefiting from the excitement around the technology, but at least one investor is saying it's time to fade it, or maybe the time was last week. Ben Axler joins us after his report from Spruce Point Capital Management. It's been a big year for the stock. Ben, welcome back to the show. What really put this on your radar? Yeah, thank you. How'd you come to this?
Well, this is a name that we warned investors about a year ago. The company came public during the speculative craze for AI stocks, had a big move up to the hundreds. We warned investors, hey, you really have to, do some checking here on the history of the company. This is a company that first business model was C3 Energy during cap and trade. Then it pivoted to C3 IoT and Internet of Things. Then it pivoted to C3.AI. And now it's attaching itself to the latest buzz, which is the ChatGPT generative AI buzz. But that has really nothing to do with their core business, which is enterprise AI. They have a very narrow market segment and a very narrow customer base. And there's a lot of questions about, what does this generative AI really mean for their business? And we think it means nothing. We think nothing has fundamentally changed. We scored ourselves on our predictions last year about the estimates being too high, about management being too promotional, about the concerns about the CFO. And about the price target. And pretty much all of our predictions a year ago came true. And in fact, the only thing we scored ourselves negatively on was we were too conservative how far the stock would fall. And here we are today. The stock's back in the 20s unjustly. And so we're short again.
The relationship on the energy side is kind of interesting because when I was going through your report, you talk a lot about a relationship they have with Baker Hughes. So when you're looking at this and you're viewing it as an AI business, you're going, okay, well, what's the connection with Baker Hughes? But to your point, I guess that's from an early origin of a kind of different mission that the company had. Is that right?
Right. Well, again, if Baker Hughes is their largest customer, and in our initial report, we pointed out there seemed to be some friction there and multiple revisions to the contract with Baker Hughes. But ask yourself, how is Baker Hughes going to use a chatbot to improve its business? That's a central question. We asked management. We said, hey, give us one customer use case of how this new generative AI suite you're introducing is going to benefit your customer base. We got no response. So the only thing the company's done is put out another press release about a partnership with AWS, and they've had press releases of partnerships with AWS going back 4 or 5 years. So, we fail to struggle. What does generative AI have to do with their enterprise AI, which, involves helping companies predict, for example, failures of assets in the field? That's kind of really one of their core businesses. But generating images and generating responses to questions, how is that going to help their core customer base? We don't have an answer, and the company hasn't given us a response.
What is coming from in terms of the price movement this year? From $10 to 31 at the highs, now down to 21. I think responding to some degree to your report as well. Is how much of that move is coming from the market's imagination, putting together just the ticker, which is AI, with this sensation around the ChatGPT stuff, and how much is the company facilitating itself in your mind and embracing that, and to an extent, I guess you would argue, is misleading people along the way?
Well, we think 100% of the move is based upon investor enthusiasm for an unproven concept. And we'll point out that the analysts, so if you don't believe what we say, that there's a lot of speculation and hype embedded in this, then listen to what the analysts are saying or not saying. So they're covered by Morgan Stanley, by Deutsche Bank, JP. These are big brokers with access to management. And none of these analysts have boosted their revenue targets $1, nor have they increased their stock price. In fact, they've maintained their stock price, which is down at the $11, $12, $13 range. And so that's where we think the fair value is. I mean, if the analysts and the company knew something that we didn't, price targets and earnings targets and revenue targets would be increased, but they're not.
The thing I will say is that to the point about the difference between the market's message about what this company might be and the company's message, I mean, when you look through generally most of their marketing and advertisement, you don't see a lot of the generative AI claims there, right? It's more about their to your point, kind of supply chain and enterprise technology, trying to identify loopholes. We talked last year about how the company had a relationship with Google Cloud. They were partnering to try and address supply chain impasses. So do you think that they are going to kind of publicly address this, or might they take advantage of the stock pop and try and issue some shares or something? I mean, the company was had a terrible 52-week chart. I mean, should they not take advantage of this and do something with financial engineering?
Well, this is a great point you raise, and this is one of our key issues. We think the company has a real credibility problem because they're saying that they're going to stem their cash burn, but yet, again, none of the analysts seem to believe them because the analysts still have this company burning cash. And one thing we do know is that the company has previously taken advantage of the market opportunities quite well. They raised capital during extreme enthusiasm for technology stocks and AI stocks a few years ago. So, we question also, why did a broker, D.A. Davidson, put a buy recommendation at a $30 price target a week and a half ago? Most of these brokers seek to do business with the company. So is the company lining up another capital raise to take advantage of this frothy market? It's certainly possible, right? They lose money. So this stock price moves could certainly entail more dilution.
Okay. And you're thinking this should go back to the 10s where it was coming into this year?
Well, absolutely. Again, nothing has fundamentally changed. I mean, we pointed out today that even JP Morgan put a cessation of use internally for ChatGPT among its employees. And so, again, this is a company that's known for enterprise AI, and yet we have big enterprises, big companies already restricting the use as they try to figure out, what does all this mean for their business? So, if enterprises are going to balk and or be slow to adopt this, then that further begs the question, how is this going to translate, certainly in any near-term capacity, into revenue for C3.AI?
Okay. Appreciate the update on the views, Ben, as always, bringing it to us.
Thank you very much. Appreciate you having me.
Sure thing. You got it. Ben Axler with a short case for C3.AI after a 90% rally. That's as of now 95%. Of course, it was up 170%.